Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Frank Lortscher on the line. He's president and CEO of Array Analytics. Frank, how you doing on this kind of ugly morning in the markets?
I'm great nonetheless. How are you guys doing?
We're doing good. So tell us about Array Analytics, as I know it's a new venture for you here, and I'm going to bring up the chart in a second here of it. But tell us how you're approaching the markets.
Yeah, there are really two parts to Array. Array's got a wisdom of crowds platform, and it works with a variety of different data sources depending on what it is we need to do. But what you're going to see in front of you there is work that Array does with social data that relates to stock market. So Array looks at primarily a lot of what you're seeing in our signals right now is data that comes from StockTwits and from Twitter, scans those markets, processes it through a series of algorithms that are oriented around wisdom of crowds logic. So we figure out both things that relate to individuals in the crowd as well as what's going on at a macro level, and then we turn that into signals and have been trading those signals for a little while now.
Now, you trade the signals, okay, and I know you do that, but what I kind of like about your fund is that, let's say, you go in the Apple long. What do you do? What do you do to hedge yourself?
Yeah, so we like to hedge at the sector level against all of our signals. So we actually have, since I talked to you last, we've opened up a second fund, but our core fund, the one that you're familiar with and that we started with, is a market neutral fund. So those are all hedged at the sector level for any given ticker, whether it's in retail, electronics, and so forth. And so what we do by doing that is we're really able to demonstrate whether or not we're generating alpha from these different signal sources.
And so just to explain your performance here, kind of new December 15th, and I see it's going through February 15th, and now
I apologize. That should be December of 14. I apologize. Yeah, I'm looking at that right now. That's just the last, so we're looking at a couple of months of data, and what you're seeing there in the line graph is our second fund, one that we're really excited about. That is a variable fund. So what that does is that takes vertical spread positions. We take debit spread positions in whatever direction the signal is, not too far out of the money and not too far out into the future. And that is a way of actually doing two things, because what we found is that our models are identifying both some alpha relative to this sector that the market's not seeing, and some volatility. And so the other graph that I sent you, folks can have a chance to see if they want to look at my blog later, shows the position-by-position returns of the hedged fund to show that we are creating that alpha. And this really shows you the cumulative effect of combining both the alpha that we're identifying as well as the unpriced volatility.
Okay, all right. And do you want to talk about any of the positions that you have in here? Or you get your signals right at the end of the day, correct? So, but doesn't that make you kind of nervous that you're not going to get your signals till the end of the day, or are you just comfortable with that time frame?
Yeah, well, it's I don't sleep well all nights, and there are certainly always curveballs over the weekends or early morning. I know that. So one of the positions that we established this week was a long Amazon position, and that's work that we're doing Sunday night to prepare for Monday morning. And SunTrust comes out and downgrades it. And you always are a little bit concerned about how things like that affect the market, but we have more of a quant orientation toward our social data sources, and so what we know is that in the long run, as long as we're doing our work right, these will play out. So we try to not watch the ticker too closely, and instead focus on the data sources, focus on the logic, and focus on the math.
Do you have a group of people that you follow, or do you just take in mass all the social media regarding an issue and use that for your decisions?
So yeah, I sort of say both, right? So we're looking at everyone, and we look at them both as individuals and how they perform as a group. So it's pretty complex math, but you might imagine that there are times when you and Brianna agree, and that's a good sign, and there are times when the two of you diverge, and I have to make up my mind of which of you is more worth following at a particular moment. So we're doing both that aggregate sentiment work as well as paying some attention to the strengths and weaknesses of the individual.
So you have like no long-term opinion on the markets. That this is your opinion means nothing. You're just following the data, and it's you're gonna live and die with it.
Yeah, that is the nature of a quant fund. It's true. What we do have an opinion of is the applicability of these kinds of methodologies in different market conditions. So one of the things that we've discovered over the last several years, and this isn't terribly surprising, but especially if you're familiar with communities like StockTwits or you use Twitter a lot to discuss stocks with people, is that there is a predominance of momentum investors in that environment, and it does have more of a momentum dynamic. We've been interested to see what kind of signals derived on that data are working well and which ones aren't as the markets have gotten more sideways. So a lot of the back testing that gets done is done over periods of time when everybody looked like a genius, and a lot of what was happening in social data was accelerating those kinds of returns. We think, and certainly the graph that you have of our performance over the last couple of months in this new vertical spread fund. By the way, our market neutral fund's doing great too. It's over the benchmark for the industry, so they're both doing really well. But we think what's interesting to see in that graph is that we're able to take these kinds of social data signals and process them even in a sideways market.
Frank, can you tell us a little bit about what you're looking at right now? Give us a couple of names.
Yeah. So we've been over the last month been up and down the Apple roller coaster and rode it reasonably well. We are not in it at the moment. That is sort of a change for us. What we are in recently just opened up yesterday are positions in both Amazon and Google, and we're long both of those positions. And as I mentioned to Joel, held the Amazon despite Bob Peck's news to the contrary yesterday morning.
Okay, and then Google, you long Google?
We are, and interestingly enough, that's something that we don't see in our data very often. So when we see it, of course, I have to sort of split my personality in two parts. I do have my own personal opinions, but I love Google for the long term, but we are typically in these positions more on the order of a couple of weeks. And so when we get a long signal Google, I'm always eager to see what happens. That's a very different time frame, obviously, than the one that I like to think about and read about when I'm thinking longer term.
Okay, don't let your opinions get in the way. We've been on the line with Frank Lortscher. He's president and CEO of Array Analytics, trying to take the social data and the wisdom of crowds to invest in the markets. Frank, we'll keep an eye on your fund. We'll hope to have you back on again soon.
Sounds great, everybody. Have a great day and happy trading.
Thanks, Frank.